What's going on, everybody? So today in this video I'm going to be explaining what a fair value gap is. So make sure you guys like and subscribe because I post lots of educational content, and I'm going to be starting to explain all of the ICT concepts within the next few weeks. So yeah, stay tuned. Also, if you'd like to join a free community full of great traders, and the Discord in my bio is free, and I have free futures education there, and I have some people that send out alerts about market status and stuff that will help you out and give you some notes to look after. Let's get straight into the video. Alright, so let's get into what a fair value gap is. So, simply put, a fair value gap is a market situation where the supply of buyers is significantly higher or lower than the demand of sellers. So this causes a price to move quickly towards higher or lower areas of supply or demand. We're going to look right here. This is not a fair value gap, but I'm going to explain why it's not. So as you can see, this black candle right here, we have this low right here, so the low wick, and then we have the candle after it, body closes over the previous candle's wick. When we're looking at fair value gaps, we look at the big candle as the middle one, and then we look to the left and to the right. So as you can see, let's mark out the low of this one and the high of this one. It's not a fair value gap. Let's show you what a fair value gap is so this can make more sense. As you can see right here, we have our high, and then we have right after it, we have the low of the candle after the middle one, okay, to the right. So this would be a bullish fair value gap because you see there's a gap there. There's no wicks that, go over. So that would look like this. Okay. If the wicks look like that, this would invalidate this. But since they don't and there's a gap, a obvious gap, you can see there's no wicks in this area right here. This makes it a bullish fair value gap. How do we use this? So we want to look for price to come back and retrace into these levels. After they retrace, they tend to go back in the same direction as the original. So if this is bullish, I want price to come back down, retrace into this area, and then continue back higher again. Let's see this play out. You can see we wicked it, but we still haven't filled it. So because we wicked it, this gives me good confirmation that we will fill it. As you can see, we filled the fair value gap. We have liquidity resting under these highs. You don't really need to know that, but we could continue a little bit lower before we continue higher. And just exactly as I said, we had liquidity under here. Price came down, went to this exact low right here, and then retraced back up. So as you guys can see, our original fair value gap is right here, just from this high to that low. We were bullish. We go up, and we come back and retrace back downwards. Okay, we had resting liquidity under here. We took that out, and then we continued higher again, back in the bullish direction. See? Alright, so now I'm going to show you guys what a bearish fair value gap looks like. So here's a bearish fair value gap. So we have our middle candle, we have left and right. So to the left, our low right here does not overlap this high on the right. We draw our lines. So now we have a fair value gap, and we're expecting this to get filled. The price is coming back down to these levels right here. I expect this to reverse and come back and fill this. As you can see, price came back, swept under that level, took out liquidity, and then came back and filled this. As you guys can see, this can be used for entries and targets to where you want to target. So if you know this is going to get filled, that's where your take profit can be. So now how can I actually put the fair value gap concept into a strategy or use it for entries? So let's look for a fair value gap. So right now we have two right here. Alright, so when we see stacked fair value gaps, I want to see the very top one, or at least all of them get filled before I expect market to continue in the original direction, which is bearish, as you can see by the black candles. Okay, as you guys can see here, our final fair value gap got filled. Now, I'm going to enter a sell. So you can put your stop loss above the fair value gap. See, it's a $40 stop, so it's super low risk, but personally, I'd like to put it over this high right here. Risk 140, I want to aim for these lows down here. Okay, as you can see, we have a low right here, fairly equal lows. So, here you go. So 130 to make 300. Let's see. We instantly hit take profit. We even continued lower went past this low. So now let's erase these fair value gaps and look for another entry for another example. Right now, actually, there's a small fair value gap between these two wicks right there. As you can see, there's a gap. See if we can get a retracement. Got a retracement. Enter a short. Okay. Now we're going to target these lows right here. And I like to do the bodies for extra safety. Right through my take profit. So yeah, we even went down to this wick. So that's an easy example on how bearish fair value gaps work. So now let's get into how bullish fair value gaps work. So now we're on to our second example, but now we're going to be looking at bullish fair value gaps. So as you can see, we have a bearish fair value gap up here. We have a small imbalance right here. Now we have price reversing and going the opposite direction on the 5-minute. And we have a fair value gap right here. So basically, I'm going to use this as a long entry. Or so basically how I'm going to use this is I'm going to wait for a retracement back into this box and put my stop loss under these lows. So, okay, so I entered a buy right here. Stop loss under these lows, and I'm going to target this fair value gap up here. Okay. Personally, if you're targeting them, I like to do about 50% because as we can see right here, this swing high right here, this swing high retrace back into the fair value gap. So you can pull out your fib tool from the bottom to the top, mark out about 50%. It's very close to this one, so we're aiming for 50%. So let's see this play out. As you can see, we smacked the take profit. We even went above 50%, and we ended up going and completing the entire fair value gap. So that's exactly how I'd use this for entries. All right, so now for our second example of a bullish fair value gap, let's find a fair value gap. Okay, so as you can see on our last trade, we ended up going higher than the fair value gap, targeting these highs over here. Okay, we got one right here. So it could get filled here soon. Yep, we got filled. Okay. Boom, we got a fair value gap right here. So we're going to wait for a fill, and I'm going to enter longs again. Okay, entering longs with my stop loss under this low, because we technically have a fair value gap right here. Even though it got filled, I'm just going to give myself a little bit of wiggle room. Now, so we're risking 140, and put our TP all the way up here to these highs. Let's see how it plays out. Smack the TP exactly. We went even higher. So that was a good example. So those were perfect examples of how fair value gaps can be used for targets and also for entry points. So I hope you guys like this video, and I will catch you guys in the next one. Peace.